Imagine waking up tomorrow, checking your bank account, and seeing exactly $10,000 sitting there. Your decisions over the next 24 hours dictate whether that balance begins to evaporate or starts the long process of building lasting wealth. Most beginners treat investing like a shopping spree. They spend time searching for a single stock pick or trying to identify the next massive tech giant. A $10,000 portfolio scales over time when it is managed by an automated system that runs continuously without manual intervention. Owning assets that grow for decades creates the foundation for wealth, making short-term market predictions secondary to the long-term plan. Our master pie chart maps out the $10,000 allocation. First, 20%, $2,000, goes directly into a high-yield savings account. While earning lower returns, this cash serves as emotional armor against unexpected medical bills or job loss. With Owling Emergency Fund, a sudden expense forces investors to sell their volatile assets at the exact wrong time, permanently locking in losses. Emergency cash is the foundational defensive layer that provides the psychological safety required to take on investment risk elsewhere. Returning to our pie chart, we add this new 15% segment. That is $1,500 directed into tax-advantaged retirement vehicles, like a 401k or a Roth IRA. If your employer offers a 401k match, your priority is capturing it. This provides an instant return that almost no other investment can consistently beat. If you are eligible, a Roth IRA offers a specific tax advantage. You pay taxes on contributions today, but every dollar of growth you withdraw in the future is entirely tax-free. Chasing speculative stocks while ignoring matched or tax-free accounts leaves thousands of guaranteed dollars on the table. Now we look at the largest section of our chart. We deploy 55% or $5,500 into low-cost, broad market index funds. Trying to outsmart professional traders on individual stocks is a high-stress approach that rarely beats the market average over the long run. History shows it is difficult to predict which specific companies will survive technological shifts over 20 or 30 years. A broad market index fund allows you to buy fractions of thousands of companies at once. By executing one purchase, you guarantee owning the eventual winners. Simple portfolios are easier to stick with over time. Complexity often leads to emotional decision-making, while simplicity encourages consistency. Because predicting individual winners is difficult, owning the entire market is the most reliable way to participate in global economic growth. We complete our pie chart with this final 10% segment. This last $1,000 is earmarked for books, courses, or developing income-producing skills. At the start of an investing journey, your ability to earn more capital is often more valuable than your initial portfolio size. If a $1,000 investment in a new skill helps you negotiate a $10,000 raise, you have created a massive new engine to feed your investments every single year. Upgrading your personal earning power turns a static pile of cash into an ongoing stream of investable capital. The final operational step is to log into your brokerage account and set up a recurring, automatic monthly transfer into your chosen index funds. This graph compares two growth curves. The flat line is a one-time investment left alone. The exponentially accelerating curve represents that same $10,000, fueled by relentless monthly contributions. By buying every month, your returns begin earning their own returns, dramatically accelerating the upward trajectory. To protect this compounding curve, you must avoid investing money you will need within the next 3 to 5 years. Protect your first $10,000 by avoiding day trading, option speculation, meme stocks, and using borrowed money. You also have to ignore headlines and financial influencers promising shortcuts to riches. These distractions only serve to interrupt your long-term system. Wealth is generated by automating your discipline and allowing time to act as your greatest financial asset. This is our completed system: $2,000 for defense, $1,500 for tax leverage, $5,500 for whole market growth, and $1,000 for personal income expansion. Because wealth isn't usually created by one perfect investment, it's created by thousands of ordinary decisions, executed consistently over many years. These percentage allocations and principles remain the same, whether you are starting with $10,000 or building up from absolute zero. If you found this system helpful, hit the like button and subscribe for more financial guides. And tell me in the comments, how would you allocate your first $10,000 today?